you check your bank account, and for the first time in your life, the number looks different. Not $237, not $1,142, but $10,000. 5 digits. You stare at it for a second, then again, because a few years ago, that number felt completely impossible. Student loans, credit cards, rent that somehow goes up every year, groceries that now cost the same as a small car payment. Saving $10K felt like trying to fill a swimming pool with a teaspoon. But somehow, you did it. You should feel rich. You should feel secure. But instead, something weird happens. Life suddenly starts getting more expensive. Your car needs repairs, your landlord raises rent, your credit card company emails you about a premium rewards card, and suddenly the system that made saving feel impossible starts tempting you to spend it. Because here's the strange part nobody explains. Saving your first $10K isn't the end of the game. It's the moment the real financial system starts noticing you. And if you're not careful, the same rules that helped you save it can quietly pull you right back to zero. Let's talk about why saving your first $10,000 feels so ridiculously hard. Because if you've ever tried, you know the experience. You start saving, you skip eating out, cancel a few subscriptions, you pack lunches. Maybe you even take on extra work, and slowly, painfully, the savings number climbs. $500, $1,200, $2,000. Then something happens. Life punches your savings in the face. Car repair, medical bill, unexpected travel, insurance increase, and suddenly your progress drops by $1,800 overnight. It feels like running on a treadmill. You're moving, you're sweating, but the scenery never changes. And this is where a lot of people start blaming themselves. They say things like, "I'm just bad with money." But here's the truth. Most people aren't bad with money. They're just playing a game where the rules keep changing. Inflation slowly raises prices. Housing costs climb. Groceries get more expensive. Meanwhile, your paycheck moves like a sleepy turtle. So saving your first $10K becomes this giant uphill battle. But something interesting happens when you finally reach it. Your brain switches modes. You go from survival mode to decision mode. And decision mode is where a lot of people accidentally sabotage themselves. Because now the questions start. Should I invest? Should I upgrade my car? Should I take that vacation? Should I finally enjoy the money I worked so hard for? And suddenly your savings account turns into something dangerous. Options. And options are where people start making expensive mistakes. If we haven't met before, my name is Red, and I'm slightly obsessed with figuring out how money actually works. Not the motivational poster version, not the wake up at 5 a.m. and manifest wealth version. I mean the real system, the one involving credit scores, student loans, 401ks, and the invisible rules that shape most people's financial lives in America. Quick disclaimer though, this video is education and entertainment only. I'm not a financial advisor. Always talk to a qualified professional before making major financial decisions. But what I can do is show you the patterns most people never notice, especially the ones that show up right after you save your first $10,000, because that moment is where the financial system quietly shifts. Before 10K, life feels pretty simple. Not easy, but simple. Your goals are obvious. Pay rent, pay bills, avoid overdraft fees, maybe save your first $1,000 emergency fund. This is survival mode. In survival mode, every dollar has a job. You're focused, you're cautious, you're paying attention. But once you cross that 10,000 mark, something subtle happens. You enter stability mode. And stability mode is where the system starts interacting with you differently. Your bank notices the balance. Suddenly you get emails about premium checking accounts. Credit card companies start offering better rewards cards. Investment apps send push notifications. Earn 3% cash back. Start investing today. Upgrade your financial future. And none of these offers are necessarily evil, but they do something interesting to your brain. They create decision fatigue. You're suddenly managing savings, credit, investments, subscriptions, rewards programs, travel points, retirement accounts. And your brain starts looking for a reward because after years of struggling, you finally have breathing room. And breathing room often turns into lifestyle inflation. You upgrade the apartment, upgrade the phone, upgrade the vacations. Individually, none of these decisions feel crazy, but combined, they slowly absorb the money that was supposed to build your future. This is why so many Americans earn more than ever before, yet still feel broke. According to Federal Reserve surveys, nearly 40% of Americans would struggle to cover a $400 emergency. Not because they never earned money, but because stability quietly turned into expensive habits, and the system encourages it, because a stable spender is more profitable than a cautious saver. Here's the part most people never see. Your first 10K is slow, painfully slow. But after that, money starts behaving differently. Let's say someone invests $500 a month, not aggressively, just consistently, with average long-term market returns around 7% per year. After 10 years, that's about $86,000. After 20 years, around $260,000. After 30 years, roughly $610,000. Now here's the interesting part. The first $10,000 of that journey takes the longest because at the beginning there's no momentum, no compounding, just discipline. But once the base exists, growth accelerates. Think of it like pushing a giant rock uphill. The first few feet are brutal, but once it starts rolling, momentum does the work. The problem is, most people push the rock halfway and stop because life gets distracting and the system offers easier, shinier options. Let's imagine two people, Alex and Jordan. Both are 30 years old. Both finally save their first $10,000, and at that moment, their financial paths start to split. Alex feels relieved. For the first time in years, money stress fades. So Alex upgrades a few things. A slightly nicer apartment, a newer car, a few more dinners out each week. Nothing extreme, just small improvements, but those improvements raise Alex's monthly expenses by about $600. Now saving becomes harder again. Years pass, the $10,000 savings barely grows. Sometimes it even shrinks. Financial life feels stable but never really improves. Now look at Jordan. Jordan also celebrates the $10,000 milestone, but sets a weird rule. The $10,000 stays untouched. Emergency fund, non-negotiable. Then Jordan starts investing $400 a month. Not perfectly, just consistently. At first, it feels slow, almost pointless. But after a few years, the investments hit $25,000, then $50,000. Eventually, the growth happens faster than the contributions. Now Jordan has something Alex doesn't: momentum, options, time flexibility. And here's the crazy part. The difference between Alex and Jordan wasn't income, it wasn't intelligence, it was one rule. What happens after the first $10,000? So if you're working towards that first 10K, or you just reached it, here's a simple playbook. Rule 1. Protect your first $10,000. This is your emergency shield. Job loss, car repair, medical bill. Life happens. This fund prevents small problems from becoming financial disasters. Rule 2. Build a growth layer. Once the emergency fund exists, start investing, even small amounts. Consistency matters more than size. Rule 3. Automate everything. Automatic transfers remove willpower from the equation. Savings grow quietly in the background. Rule 4. Ignore lifestyle pressure. Your income rising doesn't require your expenses to rise. Financial freedom grows in the gap between those numbers. Rule 5. Be suspicious of financial products. Not every upgrade helps you. Some just make the system money. Stay curious, not impulsive. Your first 10K isn't magical because of the number. It's magical because of what it represents. Control, breathing room, a tiny amount of leverage in a system that usually feels overwhelming. And once you reach that point, you realize something important. Money isn't just about buying things. It's about buying options. Options to change jobs, options to move cities, options to handle emergencies without panic. And those options start with something surprisingly small: 5 digits in a savings account. Because the real catch is this: saving your first $10,000 feels impossible. But once you get there, you finally stop playing defense and start building a life where money works for you instead of constantly working against you.